Well, good morning, everyone. Welcome to our Wednesday morning trading room. First day of summer. And, you know, I was mentioning the other day how closely the calendar or how closely the seasons follow the calendar in this part of the world. And sure enough, the last couple of days it was cool and cloudy, very spring-like. And today, nothing but sunshine and clear blue skies. Go figure. Okay, so we're watching the NASDAQ here on this particular monitor. I'm also watching crude oil, and I've got the E-mini up today on my other monitor. But please don't be shy about requesting markets if there's something you would like to see. Yesterday, the market very much in a decline. You can see we were shorting it pretty much all day. It was a little reluctant to get going at first, but then once it settled in on a direction, it just kind of continued to trickle lower from there. Not much through the overnight. Prices recovered a little bit. So we have a tiny opening gap. But the market not all that keen on filling gaps lately, or so it seems. Let's take a look here at the Raptor. Pre-market, we got a very solid hard edge bounce. And the market rallying up from there. And let's see now. Okay, well, we are getting a counter trend signal with the soft edge sell. And, well, the target for this would be the hard edge. What time is it? Oh, we're only about 3 or 4 minutes into the session. But I would expect the market to try to drift down here a little bit. Jack's asking, would you have taken the pre-market signal for the NASDAQ? Yes. Pre-market or overnight is not what it used to be. The markets are actually fairly liquid now, especially about an hour before the open. This one printing about an hour and a half before the session, the North American Open. All right. We are getting a few opportunities at a second push on this signal. The second push signal simply means that we allow the signal to print, and then we look for an opportunity to get in on some renewed momentum. So let's see if this is a little aggressive. Normally on a counter trend trade, I only try a single contract. Oh, they're struggling a bit here. Might come back with a hard edge bounce. All right, so we've seen a couple tests now of the high. And it looks like they're going to try to bring me in on this trade. Or not. Yeah, we're going to get a hard edge bounce signal here. So we're going to produce a number 3 signal as well. So we've got ourselves a kind of an OCO type situation where the market is looking to break one way or the other. So maybe I will set up an OCO order. So I'll look to buy above the high of the morning, look to sell below the low of the morning. I would be getting in a little bit late here because the hard edge bounce signal actually printing right here. Okay, so maybe they're going to try it to the long side now. Okay. Now, when you use an OCO order, you don't have a preset profit target, or I don't have a preset profit target in this one. Oh, come on, don't waffle now. Let's go, come on. One more push. We're kind of flirting with some resistance from yesterday. If we take a look here at the eagle, it might be a little bit more obvious. So this is where we're at right now. And you can see this is where the market struggled a little bit yesterday, around the 57, 58, 59 area. So this is the conflict they're having. Oh, I don't want to roll my stop just yet. What are you doing? Oh, sure. Come back with a soft edge sell, why don't you? I'm going to stay with the trend side. So this is our hard edge bounce signal here. This is the number 3 signal. It did not print because I guess Technically, the market did not intersect the hard edge, but it is still a hard edge bounce. Well, it's not looking very good right now. The buyers do need to recover this trade, and pretty quick, I would say. This is always the challenge when you try a breakout trade, is that a lot of times the market's going to fail on a breakout. This number 3 signal perhaps a little bit more reliable, especially since you can take this one on a second push also. And the reason I say that is we've broken out of the trading range. Now we're seeing a retest, albeit a rather deep retest, and then hopefully the market will continue higher from here. All right, I'll save a couple of dollars and roll my stops in below that swing low. If it fails at that point, well, it's probably going to unwind to the downside. Yeah, I'm with you, Jake. Jake says, I hate the sideways action. The key is, to be patient, especially with your stops. And if you've been in the room any time at all, you know that's a lot easier for me to say than is done, because I have a tendency to over-tweak my stops. Yeah, like Andre says, then you hate 70% of the market. Well, that's about right, Andres. Because, of course, statistically speaking, the market is moving sideways about 70, 75% of the time. Now, different traders have different definitions of what sideways constitutes. Some traders will, look at a little range like this and say, oh, the market's moving sideways. And other traders with a broader view will say, oh no, the market's just in an uptrend. It's in a big uptrend. This, by the way, this uptrend is the reason I was a little reluctant to take a counter trend signal to start and rather focused on the with trend signal. Now we're right up here again at this resistance area, the same levels from yesterday that the market is continuing to struggle with, and this is not good. This is not good. This is going to be the final push here on the part of the buyers. If they can't get it together here, come on, give me one more bar. Pretty please. Yeah, way to go, Jake. Jake says, I pet my dog for good luck. I'm going to manipulate the market here a little bit and move the price higher with the magic mouse. Come on, get up there. Yeah, Peter says here, scalp mode for me, and that's always a good strategy. If you're in doubt, take the profit when you have it. Because even on small moves like this, it's likely the market's going to offer you a scalp target. There's a very high probability of that. Come on. If we can just see another bull bar here, I think we're going to be in luck. And no. All right, well, they did tag me. Almost got the trade back to break even, but not quite. Okay, so we're getting a little bit of a mixed bag here. Just a moment while I finalize my trade in my journal. They may well try to head lower, seeing how they haven't gone higher. Maybe I will try this soft edge sell signal. I'll just go in with a single contract. So you can see we've produced soft edge sell, soft edge sell, soft edge sell. Those are all the number 2 signals. So we keep testing the highs, we keep failing. And once again, we've got an opportunity for a second push entry, which will help. Okay, a couple of questions here, so just bear with me. I will get to everybody. Peter says, trade forecaster rules. Yeah, the trade forecaster really good for giving you a pretty good indication of what the current market mode is, what the next one is. So currently we're in swing mode for about another 20 minutes, after which we are in scalp mode, so no sign of relief just yet. And I'm going to extend my profit objective here to the hard edge. Which is the intended profit target for the soft edge bounce. Okay, stops at break even now. So far, so good. Hooray for us. Okay, that's a nice steady progression lower. That's the way. I like it. All right, Jack's asking, would you use the hawk to do the scalp trade? Well, you know, the hawk, of course, is specifically designed to pick up scalp signals. So it's going to produce signals when that scalp environment is just right. So you could certainly focus on the hawk for your scalp signals. The raptor, of course, incorporating elements of the hawk. So you're also going to see scalp-like signals from the raptor. But here's the first micro-macro cross lower. That's a high probability trade. Here's the first micro-macro cross higher, came out of the open. You would have had to ride it out quite a bit, but it did hit its high probability target eventually before falling off. I trade each of the tools independently because they've all been designed for their specific tasks. So if I get a scalp signal, yes, I will scalp it. If I get a trend signal, I'll take the trend signal. If I'll take the falcon signal, if I get a swing signal, I'll take the falcon signal. I focus a little bit more on the raptor because I know a lot of the owners in the room are raptor owners. So that's why I spend a little bit more time on the raptor. Excuse me. But if there's something you would like to, for me to focus on the other tools, by all means, just let me know. Jake asked, when you see so many signals, how do you interpret the market? Sideways, I guess. Well, yes. You know, I'm always saying a lot of traders make the mistake of when they trade, this is what they look at. Right? This is how their chart is. A lot of traders will even set up their charts like this. I've seen them do it, where they have this vertical chart and they stack a few markets beside each other, and this is what they trade. I don't know how you can trade like this. How you can trade by only looking at the last 6 to 10 bars. It doesn't make any sense. You have no context. When you take a trade, you cannot ignore everything on the left side of the chart. So when you're looking at a chart like this, it's obviously jumbled. We're getting lots of yellow bars printing at about the same price level, which is suggestive of a sideways or choppy market. So how do you trade this? Well, if I know the market's sideways, if it's in scalp mode or really struggling in swing mode, do I ignore the signals? No, I'll still take the signals. but maybe I'll take a scalp target. So, I take the signal, I get $50, fantastic, thank you very much, see you later, and look for the next signal. You also need to interpret how the market is responding. Like here we got a number 2 signal, no follow through to the downside. Right? There was a number 2, it had a chance to go lower, had a chance to go lower. It had a chance to go lower 3 or 4 times. It tried to press lower, it didn't get any lower. So let's try to buy it. Okay, bought it up. I could have taken profit, but I chose to try to run it out a little bit further. Ended up with a small loss. Okay, it's not wanting to go up. Well, let's try to sell it down. So again, that's all just part of the context. That is one advantage that day traders have, is that you can see how the market is unfolding. If you're an end of day trader and you're just looking at this chart, it's totally static. You have no feel really for how the market is unfolding. You have to try to look back on the chart and say, okay, well, they tried to go up, they tried to go up, they tried to go up. Looks like they're not going up. Maybe I'll try to sell it short. You will never, ever have all the pieces to the puzzle when you take a signal. There's always going to be a certain amount of uncertainty, and there's nothing you can do about that. That's why we need to protect ourselves, why we cap our risk, or in the case of a counter trend signal, why I only took a single contract. So, you do the best you can, you look at the context, you look at the signal, and then you take the trade, and you try to manage it the best that you can. And that's trading. So long as at the end of the day you're a little bit more right than wrong, then everything's all right. Traders, by the way, make money in sideways markets, both buyers and sellers. Traders have different agendas. Not everybody is a short-term trader. A lot of traders will be taking long-term positions. They may be setting up. We looked at the NASDAQ daily chart the other day, and it's definitely looking a little top-heavy. Mind you, it's been looking top-heavy forever. It keeps going higher. Paul, I'll answer your question, then Elmer, I'll get to Elmer's question, which is a little bit more involved. Paul's asking, what's that thin green line on your Raptor? This is the initial balance lines, or these are the initial balance lines from Indicator Warehouse. It's an add-on indicator, and what it does is it highlights opening range for me. So I know this is the high of the opening range, and so far this is the low of opening range. Opening range, that first half hour of trading. Some people believe that the institutional traders get busy early, they get their business done the first half hour, and therefore it's helpful to know where they maxed out. This is the high, this is the low, and the market will have a tendency to find resistance at these levels and support at these levels as well. Okay, so Elmer asks, good morning, Eric. Well, good morning, Elmer. The other day you mentioned that if you would trade, regardless of demonstration, etc., you would aim for $1,000 a day. Could you explain a bit? I assume you have your 2% risk rule. what equity amount, how many trades a day, hit rate you would need, etc. Okay, my daily objective is, as Elmer pointed out, 1,000 a day. If I can make $1,000, I'm just going to stop trading that day. I'm not going to risk losing any of it. To earn that kind of capital, you need to trade multiple contracts. You need to be able to take at least 2 and ideally 3 contracts per trade. That means you're going to need a fairly sizable account, at least 20,000, ideally about 25,000, in order to achieve that. Of course, you can skew your risk a little bit. Anything less than 5% is considered prudent. 2% is considered the ideal. How many times a day do I trade doing that? No more than 4. Ideally, if I can pick up 4 trades and make about anywhere from $200 to $250 on the trade, then you're set, right? 4 trades times 250, $1,000. Now, that doesn't mean the market has to move $250. Remember, we're trading multiples. If I'm trading 4 contracts, that's only $50 per contract to get $200, right? So there's a definite advantage to trading more capital. I don't want to say it makes it easy, but it almost makes it easy. If I'm trading, we'll dial up the risk amount here a little bit. Let's say I'm trading 4% of my capital, and I'm going to go all in, all out, and I'm just going to have a 10-tick target, which would be a scalp target. I could take a trade like this. Boom, there's my $250. So 1 trade down, 3 to go. And when I'm trading with a quota, I know that I don't need to chase every single signal, right? Right out of the gate, I get a sell signal, but it's into the market's obviously in an uptrend. It's really early. Do I want to take that trade? Okay, well, maybe I'll try it, but not for the full amount. I'm not going to go in heavy. I'm not going to, tee it up like this. Oops, sorry, in manual mode. There we go. Let's try this again. I'm not going to tee it up like this, put $700 on the line, even though, it looks very, very tempting. Could I ride that one out? No. So I would have taken a hit on that. Now, that's why I say counter trend trades, I would go into manual mode, especially, stepping in front of a strong trend like this. Not much of a retest, right? That's the reason I wouldn't get so crazy on shorting. If I saw this, and I think it was right about here that I actually considered shorting, where we're seeing a little bit more of a test of the extreme. Again, kind of going back to the whole context thing. Right here, not much of a test of the extreme, really. A tiny little hiccup right here. Tiny little hiccup, come back, sell signal. Do I want to short that? Do I really think that this is the best the buyers can do after a monster move up? Well, probably not. Win ratio, of course, when you go with smaller targets, you need to have a better win ratio as well. And win ratios are a combination of profit target, stop loss, and frequency. So running at time, excuse me a second here, folks. Sorry about that. Running a tighter profit target, of course, is going to be easier to get your profit objective. Running a wider stop loss is also going to make it easier to get to your profit objective. Reducing the frequency of your trading means that you're skewing the probabilities that you're going to walk away with 3 winners or 4 winners is that much better. You know, the extreme example of going 1 for 1 is the best example. If you have enough capital, you can just take 1 trade on the day and make your $1,000. Right? Trade 20 contracts, $50, boom, $1,000. Now you may be wringing your hands a little bit, sweating that $50 trade, but chances are very good that you will get a $50 target. It's not that much to ask out of the marketplace, but you need the capital to trade the 20 contracts, right? Most of us don't have that luxury. But that's the way that you make money trading. You don't make money trading chasing every single signal. You don't, find a signal here. Oh, I'll buy that. Oh, I'll sell this. Oh, I'll buy that. Oh, I'll sell this. Many of you will have heard the story of the fellow who came to me and wanted me to teach him how to be a scalper. And he said, I want you to show me how to take 100 trades a day. And I said, you will never make money taking 100 trades a day. He didn't like the answer. He never came back. You'll make your broker rich. He'll send you a really nice Christmas card, but you're not going to make any money trading. Now, he probably read about Paul Rodder somewhere, and he wanted to be a high-frequency trader and get in and out. And I can show you how to take 100 signals a day. That's not the trick. But how many of those 100 signals are going to be profitable? If you're scalping, you need at least 60% of them to be profitable. Maybe even 70, depending how big your losses are. But you're going to be taking a lot of losses if you're trading 100 times a day. And nobody can maintain that kind of focus. That's why trading firms use computing algorithms. Are the algorithms right all the time and we're wrong? Nope. But a computer can do it, time and time and time again without wearing out. What a lot of people don't realize about the high-frequency trading firms is that they'll burn through a trading program in about a week. It's not like they've cracked some mysterious trading code and they're running their trading algo day in and day out, week after week, month after month. No, they get about a week out of it, and then the market catches up with them, and even on those little arbitrage trades that they like to do, the programming no longer works. And now they're starting to incur losses, and it's like, all right, bring in the next program, let's see what this one does. No, it's not. Trading is not easy. It's not easy for us. It's not easy for Goldman Sachs. Trading is not easy. So, we do what we can. We focus on high probability signals, and we focus on managing our risk, and that's all you can do. And I'm sorry if I got a little bit off on a tangent there, but it's an excellent question. So if you're trading, say, a smaller account, if you're trading a $10,000 account, if you can walk away with $100 a day, that's only 2 $50 trades. You are well on your way to earning as much money as you want. Because that, again, is what trading is all about. It's about being able to capitalize on those opportunities when you get them. All right, I'll put the soapbox away now. Ryman asks, asks, Eric, if you're in a trade position and then you want out right away, is the flat button better to use than the close button? Well, the flat button actually isn't a button, so you have to close it. This here only tells you the status of your trade. Currently I'm flat. If I took this sell signal, it would say short and the entry price. So yeah, hit the close button. Close button will get you out. And if you're at a loss, hit your panic button, but the panic button will close every order associated with your account. So if you happen to have another order open, say, I don't know, the euro dollar, you're going to flatten that one out too. Yeah, Tony says, Eric for provincial governor. You know, my wife's bugging me to be mayor. She wants me to be mayor of technically we're in North Cowichan, which is part of the Duncan community where I live, but yeah, we're having issues with our mayor. I could do it. I know I can. I'm good at telling people what to do. Not as good as my wife, of course, but I can get by. All right, so a whole mixed bag of signals again. When the market is like this, when it's reluctant to follow through, I rely a lot on the second push entry. So we've got the signal has engaged. You see how the market has retreated from the signal? I'm not sure I want to risk that much given the current state of the market, so maybe I'll go in with a single contract. Yes, Elmer says the panic button closes the trade manager as well. It essentially closes everything. Yes, it does. And that's why it's a panic exit. If the world's coming unglued, you hit that and it clears the slate. All right, well, we're hopping back and forth here. A little uncommitted, but we did break the high. Well, I guess we broke the low here. But typically, whoever controls the last swing controls the market. So we had a little bullish swing here. We're working on a little bear swing here. Oh, I guess I should put my profit target back. And I may go all in, all out on this trade. There we go. The market's still struggling. You know, this 57, 58, 57, 60 area, that's a number to bear in mind. It's going to be influential, I think, for the next few days. By the way, we do have another second push opportunity on the number 2 signal. So I suppose this is another situation where we could do an OCO order. You know, you could turn your OCO on. We could short below here. We could buy above here. We essentially have the market pinched a little. If it trades above that swing high at around 57.57 or below that little swing low around 57.50, give it a tick there, maybe give it a couple ticks here as well. There we go. All right, getting another soft edge sell. So, oh, hey, what was that? My trade manager. Let's try that again. The market a bit of a dud here right now. All right, have it your way. So this is a second push now opportunity on this number 2 signal, that counter trend signal. It's a little bit deep, the entry. I'm not really happy about it. I might actually prefer to see another hard edge bounce signal print here. There we go. Are you going to give me the hard edge bounce? Are ya? Come on. There it is. Okay, so I'm just going to pop in with a buy order. We engaged the signal. You could do a second push on this one as well. You know, when you're in doubt, when you have a hard time deciding which way the market might be going, it's always better to stay with the longer term trend. In this case, the big trend for the NASDAQ, of course, is up. Okay, I hit the break-even trigger. I haven't enabled the stop yet, which is why it hasn't rolled to break-even on its own. I'm hoping they're going to give it one more push. There they go. Come on. Get up there, you stickers. Okay, now I'll take the break-even. Oh, don't you dare. Don't you dare leave me hang right there. Where's the resistance line? Oh yeah, we're just above here. So this whole 5760 area being a little problematic again. As the sellers start to load up, try to knock the market back down. You know, they tried to knock it down here, they tried to knock it down here, they tried to knock it down here, tried to knock it down here. All right, buyers, come on. Time to pick it up. It's not really capturing a lot of profit, but better that than another break-even tap out. It was unfortunate. I thought they were going to make a go of it that time. I really thought they would push on through. But no juice. Nothing to get them through that top end. And of course, we are in full-on scalp mode, so if I were smart, I would have just taken my scalp target. The hawk here, very, very congested. You can see lots of yellow bar clustering. Same price level, around 57, 55. So we are definitely in a sideways type market at the moment. Yes, Tony says it's crude inventory. Yes, it is, coming up in a few moments. Hold on here a second, see if I can get my crude oil chart. Not much of a bracketing opportunity here. I think I would be inclined to be more of a buyer than a seller. How much time do we have? Oh, we got a couple minutes still. So crude kind of reacting here to the resistance here as well as the primary resistance. If prices came down a little bit, I would love to buy above the primary, short below the median line. Or maybe I just want to do the hard edge bounce or the cloud crossover signal, I mean. That would be something different. Usually I bracket the crude inventory trade. Maybe I'll just look to buy it today. I'll go in with a single contract. I'm going to use a stop limit order, and I will limit the trade to only 2 ticks. So the stop limit order is how much slippage I'm going to be prepared to take. Well, it ain't cheap trading crude, that's for sure. All right, let's see what we can do here with my stops. All right. So normally if you're looking to bracket the crude inventory report, we would look for the market to make a range and then bracket higher or lower. We're kind of at the top end of the range here. Okay, I'll get my order in. So I'm only going to look to buy. And we should see the inventory release here in a moment.
Order pending. Order filled. Order.
Oh, did I get a profit target in there? Well, it caught the right side of the trade, but I guess I hit my profit objective. Hooray for me! It's a good trade. It looks like I would have got tagged here on this reversal anyhow. That was actually a very nice crude inventory report, not quite as psychotic as it can be, but a good little run up to the upside based on this early cloud crossover signal that we have right here. It did not print a #1 signal because technically the hard edges of the clouds have not crossed yet, but the clouds were like 3/4 of the way crossed over. And then we got that characteristic pullback and the market came out, also bounced off of the hard edge. So the market came out, produced a buy signal, and that the #1 cloud crossover signal. That's an early #1 cloud crossover signal. So I'm just as happy that I took profit on that one when it offered it to me. Thanks, Tony, for the reminder. I almost forgot about that. So not a bad morning as far as trading goes. In spite of the lack of follow-through, we're holding our own today. Yeah, Tony says regarding the crude report, nice and gentle and organized. I must be on Mars. Yeah, that's not very crude-like, is it? They'll make up for it. All right, well, the NASDAQ plotting a little bit higher here, right into this 5760 area right now. And just watching how it's reacting. We did produce another hard edge bounce. Oh, I think that's the one that I took. 5754. Yeah, that's the one I took. Where I got tagged here on this little bit of a reverse, which was unfortunate because the market did end up trickling up to the 5760 area. Now we're seeing a little bit of a reaction as we get into that the resistance zone highlighted by the support and resistance suite. All right, just kind of watching and waiting here. Crude making a serious reversal on that earlier rally that we saw. So again, just as well took profit when we did. A late filter entry signal here on the Falcon, that tends to be a fairly reliable signal. I think the market may try to press to the next resistance zone, which, oh, that's actually quite a ways away, 5780. That's a pretty ambitious target. Just the way the market is trading today, we'd have to get some serious momentum to get up to 5780. And momentum is the one thing it seems we do not have a lot of today. Oh, right you are, Tony. Tony says, I noticed on the day ranger that the daily range today actually exceeded the 30-day average. So we're up to 250 ticks today. Yesterday, 280, 30-day average only 223. We are over the 5-day average, but just, and the 10-day range, well, we had a few volatile days in there, sitting at 324 ticks. Oh, and there they go. Get a little bit of press to the upside. Well, I may have to take that back. I said the market couldn't reach 57.80. They've all of a sudden found their legs. Yes, Stephen. It's tough here. Stephen makes the comment. I wish I'd gone long at 10.20. That would be one of these. This hard edge bounce here. Steve says I was licking my wounds from an earlier loser. You know, losing trades are unpleasant to be sure, but you really need to put them behind you. And just kind of focus on what's in front of you. That's part of the reason I blank out my P&L. People always asking, why don't you show your P&L? Are you embarrassed? No, not embarrassed, but it's hard to make a trading decision sometimes when you're looking at a P&L, especially if it's a negative number. If that's at minus 280, well, all of a sudden I'm getting a little bit gun shy. So I like to have the P&L blanked out. That's a good example, though, today. This profit on single contracts. So if you're trading the ability to trade 2 contracts per trade, well, that would be 560, 3 contracts, just shy of $900. And I think, have I taken my 4 trades? Yeah, see, so I'd have my 4 trade quota already. 4 trades, and almost, like I say, if we were trading 3 contracts, not including commissions and fees, we'd be sitting at $840. So pretty darn close to the $1,000 daily target. But don't, if you don't have the ability to trade multiples, consistency is what you're after. You want to get your trading to the point where you can consistently make that $100 a day on singles. Because like I said, after that it's just a numbers game. Okay, so 57.80, well within reach now. didn't think the market was going to get up there, but look at them go. Isn't that just like trading to make a liar out of you? And good follow through on that late filter entry signal. They're on the Falcon. The late filter entry for you Falcon traders, it occurs when the filter goes out of sync and comes back into sync. That's very important. It has to come back into sync. The trend line, however, never changes color. So it shows you a little shift in momentum, the trend line holding, and there you go. No problem at all finding the profit target on that trade. So the NASDAQ definitely bullish. We'll see whether they'll play nice and give us a little bit of a retrace here. Oh, I see. Steve says, I've got a rule not to take trades from 9:50 to 10:10. I lost track of the time and took a short near 10 o'clock, and then the news killed that trade. Well, like I say, the market's definitely bullish now. We may see a little bit of a retrace, but I think, you know, so long as you're on the buy side of the equation, you'll probably do all right. The difficulty after a big run up like this is covering the position, of course. Here on the Hawk, we're producing a secondary buy signal, not really one of our high probability signals, but let's say I wanted to take it. The problem is, where do I cover this trade? It may turn into a macro pullback, so at the bare minimum, I need to cover the trade here, but that may prove to be too tight. You know, the major swing is back here. Well, that's quite a stop, but it's almost as deep as you need to run it in order to make that trade work. Yeah, Tony, you're right. That is the first pretty, air quotes, pretty late filter entry signal in a while. That one was pretty much textbook right there. I guess I should have just trusted the signal. It didn't look so promising when it was printing. When you looked at everything that came before, just the whole choppiness of the market, it looks like a tartan down here in the filter. It keeps flipping back and forth so often. But hey, the algorithms behind the Falcon know what they were doing. Right? They said, hey, Eric, wake up. You got a late filter entry signal. Well, there you go. Passed up another $100. Well, everything's kind of dried up since that last run up. I would anticipate a little bit of a pullback. We are getting a macro pullback, maybe a four-arrow consolidation even here in the hawk. If you're looking for another chance to get in, but we may have to wait for a while for the market to make its next push higher. All right, here they come with the pullback. And the macro pullback, turning it now into a four-arrow consolidation. Could see a rather deep retracement here, actually. I wouldn't be surprised to see the market get back here, even to the support area at 57.60. Well, getting a little bit of a bounce back here to the macro line, 4-arrow consolidation, like I said. I'm not going to take the trade. It's just near the top of the hour. Again, I don't like the fact that I probably got to cover the trade all the way down there. But we do need to see a test of the extreme before there is any reversal, and I honestly don't think the sellers have it in them today. After that run up, we're probably going to see the market return it to a sideways trading range. That seems most likely. Oh, now we're into yellow bars. Oh, here we go. We got a red bar buy opportunity now. No, had a red bar buy opportunity. Back into yellow bars, so that kind of nixes the trade. All right, gang, I'm going to wrap things up here for today. Yeah, if you're looking to hang out for the rest of the session, I would be more inclined to be a buyer than a seller. And like I say, a retrace even here to 57.60 looking feasible, but don't be surprised if the market just kind of ends up going sideways for the duration. All right, we'll see you again tomorrow. We'll talk to you then. Bye for now.